Welcome back, everybody, to another episode of the Invest This podcast. I am your host, Scott Bauer. And you know what? Today's going to be a great day. You're not going to want to miss this episode for a couple of reasons. Number one, got my good friend Robert Cloud here on the other side that's going to educate us about what's going on in the mortgage industry or the mortgage side of real estate right now. But two, listen, everybody knows this crisis that we're going through has a big impact on the financial sector. So we're going to talk about that today, and I'm excited because we're going to deliver some information that maybe you aren't going to know, and it's going to help you navigate through this mess. So with that being said, Robert, welcome to the call, man. How are you?
Good. I'm doing excellent, actually. Glad to be here.
Good. Well, why don't you give the listeners a little bit more about your background, what side of mortgage that you're in, and we'll get this thing going.
Well, yeah, I've actually, I've been in the business for 17 years. I've owned my own company before. Currently, I'm a branch manager of Pinnacle Capital Mortgage, which is a division of Finance of America. Finance of America is actually owned by Blackstone Holdings, and we're one of the largest private mortgage banks in the country.
Okay. So those of you out there that are listening to this right now, you know that Blackstone is a buzzword. Blackstone's a big hedge fund company that has been around for a long time and has a lot of purchasing power in the investment space. Sounds like that, they're obviously in the mortgage world as well. So, I mean, what are you seeing? Let's start the call off with, what are you seeing right now with COVID-19 and how this has started to really affect the mortgage industry?
Okay, so this is interesting, because it's a daily thing. I come in every day and something new changes. There's a lot of jib jab going around the media. You got Forbearance, you've got Fannie, Freddie Mac, changing their guidelines. They call them COVID guidelines now. On top of that, you come in and you find out your customer, lost their job. They thought they were secure. It's kind of really hard to take in sometimes because it's like almost flashbacks to, the financial crisis that happened in 2008. This is different. Depending on which direction this whole COVID thing goes and how fast the economy rebounds can determine where real estate and finance is going to go. I don't think anybody right now really has a crystal ball and actually knows what's going to happen. As a matter of fact, I'll give you an example. Warren Buffett right now, the guy's got $152 billion war chest of cash. Okay, he's not doing anything with his money. He's literally liquidated 30% of his stock portfolio. Everybody's sitting on cash right now. In my industry, there's a lot of liquidity issues because we literally have customers that are filing forbearance on their first payment. That means when you
define what that is for everybody if they haven't heard of forbearance at this point and what that really means?
Yeah, what forbearance basically is a promise to pay, at a later date. I guess that's the simple way to say it. And it's not that you don't have to make your mortgage payment. It's that they're just basically putting it off for a couple payments, and then within 3 months, you're going to actually have to pay that back, or they're going to have to try to modify or restructure your loan. But they're not going to put it on the back of the loan. There's this misconception that you can do that, but mortgages are securities. Okay, they're basically whenever a mortgage closes, it gets put into a bundle of securities, and our company makes a half a point, Fannie Mae makes a half a point, and then the investor typically makes a point on the deal. Well, right now with the rates where they're at, that spread isn't as large, okay? And investors do not want to actually purchase mortgages because they're afraid that the security that they have at 3.5%, the way the rates are going down right now, that 6 months from now, that 3.5% coupon is now only going to be worth 2.5% if the customer refinances. But where I was going with the forbearance is basically mortgages are securities, so they get sold out to the open market. There's these companies, these REITs, that's what they call them, and they basically invest in mortgage-backed securities. Well, when you have a security, you can't just take the payments and add it on the back of the loan. So it's not like a revolving debt with a credit card or something where you can just take it and throw it on the back of the loan, and it just doesn't work that way.
Would you have to do a modification of some sort if you were going to do something like that?
Yeah, there's a lot of news and there's a lot of stuff going on with Fannie and Freddie and FHA where they're going to do something. Can you still hear me? It sounds like the mic might have dropped out.
Yeah, we're good. Yeah, you're good.
Okay, so there's a lot of industry chatter right now, and I think Fannie and Freddie and FHA right now basically are saying that in 3 months that they're going to give you. So far, this is what they've come up with. 3 months, you'll be able to refinance, and then your payoff, when you get your loan payoff, it'll have your 3 payments in there. But there's a problem with that, and I'll get back to that. But and on a purchase, you'll be able to purchase it or sell your property. And when you go to sell your property, you'll just basically, those payments they'll be on your payoff. Okay. The problem is if you try to refinance and you're currently in forbearance, you actually have to get out of forbearance. Okay. And you have to have your payments paid, all of them caught up. Okay.
That's on a refinance, right? So if
that's on a refinance and that's on a purchase. Okay. So if you have a purchase and you're currently in forbearance, you're going to have a problem. You're not only you're going to have to catch up your payments, you're going to have to show that you've made all your payments. You're going to have to provide a cancellation on the forbearance. You're going to have to write a letter on why you filed forbearance, because lenders, even though Fannie and Freddie say they'll do this, think of for 1 second if a customer could actually think like an underwriter thinks. An underwriter sees a file. The first thing they do, they calculate risk. Okay, is this loan gonna be good? Are we gonna be filing foreclosure on this loan in 6 months because this customer doesn't have a good job? And that's where all the underwriting comes from. But an underwriter sees, hey, this customer filed forbearance, or they're currently in forbearance. Even though it doesn't affect your credit score, it's still on your credit report. Okay, so at some point that underwriter is going to go, well, this is a risk because you're in forbearance currently, or you just got out of forbearance. Are you having problems? So like they're basically saying, okay, this customer's currently in forbearance. That means they may go in forbearance on the new loan.
So does that they label you then as a high risk borrower?
Yes.
Right? So if you're out there, and this is really for for investors that are out there as well now.
Oh, investors, yeah, you better be careful. Yeah, because this is going to later on down the road. Okay, 6 months from now, when you have that on your credit, because that goes on your credit like right away. I'm talking like the second you do it, it goes on your credit. And you're an investor and you're self-employed, okay, and your income comes from properties and you filed forbearance, the number one thing an underwriter is going to say is, hey, this guy's in trouble, okay? It doesn't matter if you caught up your payments or you're late, okay? That's just you immediately. That's going to be the the instant reaction from an underwriter when they see your file, they're going to say, okay, there's something going on here. And when I said something about the COVID guidelines from Fannie and Freddie, part of the COVID guidelines have actually that are directly from Fannie and Freddie. With self-employed, we have to prove that the business is actually operating through COVID. Okay. So if you don't have like a website, or it used to be 2 years tax returns. Now it's you actually have to prove that the like bank statements showing income going in. If you can't prove that and you're in forbearance, you have issues. Self-employed in general is hard to get qualified, but now it's even tougher because of the COVID stuff. But for investors, I'm telling you, if you can make your payment, because at some point when you're going, investment properties are already hard to get done as it is, if you don't know what you're doing and you don't have the right money down in reserves and everything. But 6 months down the road, okay, when they start seeing COVID or seeing forbearance remarks on the credit report, they're going to have the underwriters are those are going to be tougher loans to get done.
You're just going to have more of a challenge than you.
Yeah, it's a stigma. It's a stigma. It's just like the short sale and the foreclosure stuff back in there was a lot of people filing foreclosure and short sale when they didn't need to. Same with forbearance. Everybody that files forbearance that shouldn't file forbearance is affecting their future of mortgages, because at some point, if all these people file forbearance, and I think the number's up to like 6% of loans right now have filed forbearance, and I bet you out of those 6% of loans that file forbearance, I bet you 15 or I actually that's probably being considered 20% of those people can make their mortgage payment. If this continues to happen, there will not be any mortgages the way that they are right now with 5%, 10% FHA, because nobody's going to buy them. Okay, because what people don't understand is if you miss your first mortgage payment, the lender can foreclose. There is no, hey, I'm COVID, blah, blah, blah. The lender can foreclose because they can't sell that loan. They have to repurchase it because you missed your first payment. Okay, that's written in the guidelines. And the customer signs that. So, number one, if you do buy, there's real estate agents out there right now telling customers, hey, don't make your mortgage. You buy it. You can buy a house, and you won't have to make a mortgage payment for, 6 months. Okay, they're freaking idiots. Okay, because they're destroying their own market. Okay, there's no other way to put that. I've been here before. Okay, and I smell the smell. Okay, and this is bigger than the financial crisis. Okay, it could go any direction.
I was telling you before the call started here, I was reading an article where the vast majority of forbearance are going to those who don't need them. And it actually looks like nearing 10% of all those that have a mortgage don't actually need the help, but are still, let's see what the exact, so with the number of homeowners under forbearance plans nearing 10%, of all those that have a mortgage, 10% of people that have a mortgage are going into forbearance.
Oh, that is a
massive number. Massive
right.
number. And for all transparency to the listeners that are listening to this right now, the reason I really wanted to bring Robert on today is because I just went through this myself. In the time over COVID, the situation has happened. I was refinancing. I'm in a new purchase, both on bank loans, using bank loans. And in full transparency, when this COVID thing hit, I put all of my rental properties on a forbearance for this short term. Now, luckily, I have good people around me like Robert that, I kind of told him what happened. He's like, no, get off that right away, which I did. I was only on it for a week or two, maybe at the max. didn't miss any payments, didn't have any problems or issues, caught it back up, whatever, got off of it, got the cancellation. But when I was going through and applying for new credit to buy more properties with bank financing, what I found out was that they really do check this. And if you are in forbearance and you have any forbearance at all, there's a good chance, especially being self-employed or an entrepreneur where we already have enough trouble getting bank lending, that is going to exclude you from the people that have the opportunity to get these low bank loans. So that's really one of the major reasons I wanted to come on today, to make sure that we all understand that do not go on forbearance if you don't have to.
Right. And the ones that everybody that's filed forbearance that, a lot of people don't know. It's this stupid media situation that's happening.
Yeah.
It's like, you go on social media and then you see people making comments, in social media, and they're like, you're like reading in the comments, you're like, do these people understand? We are in a great capitalist society. Okay. Hats off to Tesla. Okay. The guy's my idol. I will be buying a Tesla, okay, at some point, because I highly respect Elon Musk for some of the comments he has made and the stuff that he is doing as an entrepreneur. Okay, it's just, and most of them, it's like Warren Buffett, feeding into the, socialist stuff that's out there. But anyways, that's another conversation. But, it's really, like I said, I had another customer, he was refinancing and he made $8,000 a month. And we went to go order the payoff, and the guy's got an 800 FICO. We go to order the payoff, and they wouldn't give us a payoff because the guy was in forbearance. Well, I called that guy like right away, and I said, look, you need to make your payments, okay, and you need to get out of forbearance immediately, because we do rapid credit checks like over and over again during the process, especially during COVID. And luckily that didn't show up on his credit and we didn't have to explain anything. And we were able to actually close the loan before that actually hit any report anywhere. But, that guy could have screwed up his deal. He was getting 3.625 on an investment property with no appraisal. Oh, like craziness. I'm like,
right.
And the guy made plenty of money. It was like, hey, let's just, this is what I'm doing, okay, and follow what I'm doing, because I've been in the business for a long time. I know, I've seen it. Okay, this is familiar. I made all my payments for 6 months on my mortgage. I've paid all my credit cards down to zero. I've stockpiled money, I put money away, 6 months reserves. And, I'm in the middle of a rehab, but I'm probably going to start it back up again, because it looks like things are starting to move again. But, I put the money, I held on to it for a second just to wait to see what was going to happen. But, I'm actually going to put it back. But, be cautious, but also invest in the economy. And investing in the economy is making your mortgage payment, okay, and keeping your investment, because at some point when this COVID shit goes away, I think the economy is going to just go like that. Okay, that's my hopes, based on what I've seen. Okay, like the only thing that's affecting the markets right now is this pandemic and risk and job loss. And now they're having problems with customers that won't go back to work because they're getting unemployment checks. Like restaurants right now are opening up and they can't get their employees to come back to work. This is America. We need to start going back to work.
Right.
Okay.
Right.
And, that's just I don't know. Sorry.
A little bit of a rant there, which I get it though. I mean, So what happens to somebody? Let's say you go on forbearance. I mean, what could happen to somebody, down the line? Because we had talked about this, probably a month and a half ago when the COVID situation was just very new and fresh, about
Right.
problems that somebody could run into later on down the line, and how maybe this is a way for lenders to make sure to prevent people from refinancing, prevent people from moving. I mean, you remember what I'm talking about? That conversation that we
Oh
had?
yeah, the servicers.
Yeah,
Okay, so I've got to be careful in this situation because I got to make sure that I'm not going to name any names.
no names.
Um,
No names.
okay, but okay, so I'll give you an example. Well, I will name some names. Wells Fargo and Bank of America and Chase. If you call up, okay, they are actually accidentally putting people into forbearance. Okay, because they don't have time, they don't have the resources to catch up with the amount of calls that they're getting. But there is some servicers are basically inviting you to file forbearance. Okay, so that at some point, 6 months down the line when you can't refinance, you're going to be their customer forever, because they'll refinance you because you're with them. Okay, and nobody else will refinance you because you haven't caught up your mortgage payments, and they're going to come back and say, okay, we'll refinance you. We don't care if you have payments, 3 or 4 payments lost. Um, you'll still have to pay that back, but at that point, you're going to be a customer for life to them. Okay, and I guarantee it, a bunch of them got together and sat in like a boardroom table, and they said, hey, let's do this. Let's make this, to where we can, you know, capitalize on this at some point, and they're basically, they want you to file forbearance so that you're their customer for life,
Kind of lock
be,
you in and make you not be able to go anywhere else. Is that what you're saying?
yeah, because at some point, this COVID relief is going to be, it's going to go away, and I think it's going to happen a lot faster. I think during the summer, and think about it. You don't make payments for 5-6 months, and the average American has $2,000 in their bank account. How are they going to pay that payment back? You know, um, they're just not going to be able to, and you know,
Then what happened?
in order for them to refinance, they have to catch up the payments, because all the lenders, all of us, okay, that lend money, if you're currently in forbearance, you have to get out of forbearance to refinance. And right now it's historic lows. The rates could possibly go even lower, okay? And this is an opportunity for many Americans to refinance and get, like, I got customers that I thought I would never call again, that their rates are at 3.5%, 3.25%. That I'm telling you, in another 3-4 months, if the rates go in the 2, because they're talking about it, the 2 range, I'll be busy for the next, you know, uh, 6 to 12 months refinancing all these people. But what I'm afraid of is good quality customers are not going to be able to refinance because they get jumped on this forbearance bandwagon,
Just because of the false information going on, or just
They're
undecided.
scared to put information out there.
Yeah. Yeah.
We are highly regulated. We can't just, like, say, hey, don't file for, we
Yeah.
can't say that.
Yeah.
And the servicers are scared. Okay, they don't want to put, like, too much information on their websites as well, that because then they could possibly get in trouble with, the 50 agencies that are like CFPB, the RESPAs, all these agencies that we're highly regulated under. But I will tell you, a month ago, Quicken Loans and Mr. Cooper. I don't know if you guys have had mortgages before. Mr. Cooper is one of the largest servicers. They were having financial difficulties because they couldn't sell their servicing. And I think they're finally catching back up because Fannie and Freddie and FHA have stepped up and, said, hey, we'll still purchase these loans. But there is something that happened in that whole situation is now, like, I'll give you an example, cash out refinances. I don't know if you guys seen the news, Chase, Wells Fargo, they won't do cash out refinances. Wells Fargo and Chase will not do home equity lines of credit. I've got customers right now that I told to draw out their lines, okay, because and this is based on, my analysis of what's happening, and I've seen it in 2008 when the credit lines were all frozen. I told everybody that if you have a line of credit and you want to use that money, you better draw it out now, because at some point they're going to freeze it.
Yep.
Well, I just had one of my investors that I've been doing a lot of deals, I've done a lot of deals for. He's an agent. He works at a commercial shop. He said, Robert, you know what? You were right. They called me up and they said they were going to rescind my home equity line of credit, or freeze my home equity line of credit. He pulled out $150,000 out of his line of credit and set it aside. This is the next thing. If you guys have a line of credit and you're depending on it, you better pull that money out, okay, and put it somewhere, okay, because at some point, and I don't know, I might get in trouble for saying this, but I'm just telling you that's the writing on the wall based on my experience of the mortgage crisis, because it's going to be harder to get cash out. Yeah. It's going to be harder. Lenders are already restricting cash out right now. Flagstar, which is one of the largest servicers and brokers, is charging 5 points for cash out. Okay, so if you're trying to do a cash out loan, they'll charge you. Oh yeah, we'll still do it, but we're going to charge 5%. Caliber wholesale, on the wholesale side, Caliber. I know many of you guys have heard of Caliber. They won't even do cash outs. A lot of our brokers, they will not. They're starting to restrict cash out, and it's a slow process, but eventually there will not be cash out for a while. So, this is all stuff caused by, number one, the forbearance situation, because servicers are the REITs that buy these securities they're not investing in mortgage-backed securities right now. The only person that's investing in mortgages right now is the Fed. Okay, there is no investor money that is going into mortgage-backed securities right now. It's really scary, because as soon as you can tell too, because when he pulls out, okay, when he doesn't do something for a day or so, the mortgage-backed securities, the demand just drops, because there is no, some of them are slowly coming back, okay, but all the money that's in the markets right now is coming from the Fed.
Which is kind of a scary place, because that's, for the Fed to be the one that's running.
Right. Yeah. Printing money,
Yeah.
It's really scary.
There's a book out there that's a very interesting read based on this, called The Creature from Jekyll Island. Have you ever heard of that book before? So it talks about the creation of our lending system, and how it was created way back in the late 1800s by Wells Fargo, and I'm actually in the middle of reading this book right now, listening to it on audiobook. But anyways, it's very interesting how, when you start to understand really how the banking system works, and the fact that our government can just print money and print more money and print more money with nothing really backing it up. We are off the gold standard. 1978, I believe, is when we went off the gold standard. 72 or right. 78, right?
Yeah.
So it's kind of a sketchy. I'm gonna look up who the author is. Edward Griffin. Edward Griffin is the name of that. Anyways, I mean, it's it's a scary thing. So, I think for all the listeners out there, I just want to make sure once again to give them a little bit of an education about what this forbearance thing can do for them, and what, hopefully they're not on a forbearance right now, and if they are, get off of it right away if you can. There was a scare of, um, for me at least, the reason I put them on forbearance right away was like, hey, are my tenants not going to pay, right?
Right.
Because
Yeah.
I'm still going to be liable for these bank loans that I have to make payments to every month because I don't own all these properties free and clear. So, that was my worry. Well, the reality is that, like, thankfully all my tenants have paid. They're great tenants, and it's been good. But then as long as I'm getting paid, I'm happy to pay. And so
Right.
until there's an issue and a problem and they don't pay, and they're not going to pay, then I'm not going to worry about it. I'm going to keep making my payments and everything
Right.
on time. Do you have
Yeah,
any?
don't get me wrong. Forbearance is a great tool for someone that's there's a lot, how many people are out of work right now? 30,
Absolutely.
yeah, just 35 million or something like that right now. It's just crazy.
Yeah.
Forbearance. Hey, guess what? The CARE Act was put into play for a reason. Um, and I bet you it's helped a lot of families. Because I couldn't imagine. I've had lots of people call me, and it's really heart-wrenching, because I really care about people, like, just in general. That's my business. I help people achieve the American dream.
Right.
And when you get a phone call, hey, Robert, I just lost my job. I don't know if I'm going to ever get my job back. I didn't get furloughed. I'm basically lost my job. Um, it really, that's what forbearance is for.
Right.
Um, you know, because nobody expected this. Yeah, it's there for a reason, but it, unfortunately, it, a lot of times, and like I said, I've got experience with this with the financial crisis. People went and like, I had investors that own 10 fourplexes, and they filed foreclosure on all those properties because they were on 100% loans. They had no skin in the game, and it was an investment. Uh, so it was a hey, I'll just file foreclosure, and then 3 years from now or 7 years from now, I'll get back in the game. It was not because they couldn't make the mortgage payments, or their investors moved out. It was just because they made a business decision to get rid of those properties, or short sale, because short sale, the guidelines were 3 years, you know, 4 years,
Yep.
and a lot of people took advantage of that. They made a business decision, because it was toxic mortgages, but at the same time, there was a lot of people doing stuff that shouldn't have done it, or didn't know what they were doing. But a lot of times there was strategic defaults, strategic foreclosures. We have a lot of guidelines based on strategic defaulting, and that's where my experience comes into play with this forbearance stuff. It will be called strategic forbearance. Okay, so at some point, when the dust settles in 3 to 4 months, when you're an investor and you strategically forbeared, and you can prove that you were actually making, or they're going to have us assessed to see if you actually had financial difficulty. And if you didn't have financial difficulty, they're going to say, okay, well, this guy, and they call it extenuating circumstances. We actually have that written in the Fannie Mae guidelines. But at some point, it will be extenuating circumstances for forbearance. So if you can't prove that you had financial difficulty, like you maintained your job through the COVID crisis, and you go to get financing, the underwriter's going to ask, hey, did you lose your job? Or did you have a drop in income? Oh, no. Oh, so you're not going to qualify for a loan. I'm telling you, that hasn't been put into place yet, but I'm telling you, at some point when the dust settles, okay, and they start looking for reasons to tighten up, that's the first thing that's going to get tightened up. Okay, is they're going to actually that is going into place, and it will happen. And many of the people that are in my industry know that that's going to happen. And any of the people that are in my industry that are putting all this forbearance out, out on the social media and not explaining what they're putting out, they need to stop it, because they need to explain to their existing customers, what's really going on. So.
As we're talking about this from an investor standpoint, you talk about your past clients and people that had fourplexes or other investment properties that decided to default and either foreclose or do a short sale or something because it was a strategic business decision, or they were 100% financed, right? They didn't have any skin in the game. So when
Right.
you're saying this sounds to me like, you just got to have good common sense and good business knowledge to know.
Right.
You have to just follow those rules. Every time, nothing, and I've thought this, I'm not sure if I've said it on here before or not, but nothing in this world is free. There's a cost to everything. Somebody may label it as free, but you're going to find out later on that indeed you ended up paying for it later. Or
right, everything has a price. Yeah.
Everything has a price and a cost. And so if you know that you're going to have to make that payment at some point anyways, and you have the means and ability to do it today, make that payment. Make it, get it done. Don't try to cut corners like you think you're tricking somebody, because it's not the case at all. You're not tricking anybody, and you're just going to dig yourself a hole that you may not be able to get out of. So,
and you're supporting your economy. Okay.
Right.
That's
probably the most important part, right?
Right, because I'm telling you, we all have to step up. The one thing about this COVID crisis is everybody in the world right now has the same problem. Okay, so now if everybody in the world can come together, okay, and create a solution, this could be good for the world. Okay, I see a lot of people now that are they're doing more family events, and people are more friendly that are out there, but support your economy. Okay, it's because that's the only way that this economy is going to continue to thrive the way it was in January. Shoot, that we record profits everywhere. Okay, this economy is great. Arizona was on track to be one of the 17% increase in rents the prior year. We had more people come in here than any other state, and actually, I will tell you some good news that I know that I've heard that's happening is that a lot of these states that are actually suffocating their people, like California and New York and, Chicago and all the states that have the highest coronavirus rates, those people that are living there right now are getting a taste of that bad word that keeps getting used loosely, and we all know what it is. And those people are going to start moving out of that state. Okay, they're going to come places like Arizona, Texas, so from an investment standpoint, we all know that we know that here, Arizona, we're in a great state. We got our governor's actually doing a lot of good things, but this state is a great place. A lot of companies are going to start coming here, which means there's going to be a lot of real estate, a lot of mortgages, a lot of, great things happening. Unfortunately, California's a great place, but if I was living in California right now, I'd be looking for the first boat out of there.
It's funny, all those states and everybody who's listening to this hopefully caught on or can read through the lines here. All of those states that were mentioned there where they're suffocating the people, where they're having the worst cases for the coronavirus, where there is the worst, highest cost of living. They all have one thing in common. I'm going to let you, the listener, figure that out. But pretty interesting. And I agree with you, Robert. They're all coming here to Phoenix.
Yeah.
Phoenix is a phenomenal spot. We have so much room to grow. Its cost of living is low. Taxes are low. It's an enjoyable place to be. And, for 8, 9, for me, it's all 12 months out of the year. you can be outside, you can do stuff all the time. It's phenomenal. But we're not ranting about Arizona here. I just
Right.
wanted to,
Yeah, it's just facts.
Yep.
We see, everybody sees it, and it's already being reported all over the place that people are going to start leaving those states. So.
Yep.
Yeah.
Well, hey man, just for sake of time here, thank you for being on. I think we shared a lot of information about the forbearance and kind of what's going on in the financial sector on the mortgage side, at least, for people to take that information and really use it to their advantage, or at least increase their knowledge and awareness of really what's going on. But do you have any final last remarks with that?
No, rates are great right now. It's a good time to like refinance if we're getting what is called appraisal waivers on a lot of our deals because Fannie's loosened up things. So a lot of our customers, I would say about 70%, don't even require appraisals.
Can we do that on the last deal we're working on right now?
I wish we could. I wish we could. I actually tried. The purchase is a little not so much, but yeah, it's the good thing is that the rates are low right now. Actually, we had a scare last month. The rates actually skyrocketed for a while because of the pent up demand and the forbearance started. But things are. I just want everybody to stay safe and again make your mortgage payments if you can. It's it's only going to help us all in the end. Yeah.
Let's move into a quick lightning round.
Okay.
Questions for you. Number one, how important do you feel mindset is on the success of not only your business but also your life right now?
Okay, so mindset is everything. Okay, I'm talking if you wake up in the morning and a perfect example, my granddaughter. We're taking care of my granddaughter right now. And talk about a ball of energy. She wakes up, the first thing she wants to do is just jump out of bed and just run and just have fun. If we were all that way when we woke up, it would just be it 100% everything mindset. You have to put yourself in that moment. You got to be ready. I listen to Tony Robbins. I listen to Burchard, and some of these the motivational stuff. I've pretty much read it all. Grant Cardone, 10-time, 10 exit. Believe me, I'm 100% believer of mindset. Okay, is everything. So
that's great. You should add the Invest This podcast to your list of things you listen to all the time because I'm super energized all the time and I love to get people, hyped up because this is a phenomenal life we get to live here. So make sure to check in at that, right?
Absolutely, no.
Second question: what is the last book that you read and what did you learn from
it? Okay, so last book I read, The Manifest. I can't remember the exact. It's Burchard Brennan. The Manifest
Checklist
Doctrine or something. Yeah. Yes. Okay. The one cool thing about that book was because I already I already do a lot of this stuff, but he showed you how to slow down time. Okay. And it was this thing that he had you do, and I don't actually remember what that thing was, but it actually works. I actually was able to slow down time because when you get older, as soon as you turn 25, I don't know what it is, but it's like a rocket ship. All of a sudden you're like, because I'm 45, I'm like, what the heck? I'm 45. Where did the time go? It's like, I remember, growing up, you're like, an hour seemed like, a day. Okay. But yeah, I learned how to slow down time on that book.
That's great. And that is a phenomenal book. I recommend everybody to read it, get an audio book, whatever it might be. What are you learning right now?
I'm learning I'm learning a lot of stuff right now. The biggest thing I'm always learning, but just who people are. Okay. Um, when stuff like this happens, you really see who people are. And, you know, it's really, I guess that's really what I'm a big people watcher, and I just see a lot of stuff, and um, I'm just learning who people really are right now.
When the tides go out, you see who's swimming naked, right?
Right, exactly, exactly. Yeah, that's a good way to put it. Yeah,
And that's the truth. I think this is tough times always show people's true colors. So that's a great thing that I think everybody could learn consistently all the time, because we're always figuring out who people are. But thank you for sharing that.
right.
Do you have a superpower?
A superpower?
Yep.
Uh, yeah, my superpower is when the stress level rises. Okay, that is when I come to play. Okay, I don't know what it is, but when everything gets chaotic, I'm actually like more relaxed than anybody else. It's just I don't know if it was a thing that was brought up in the car business with me, because I did that for 7 years. But when things get crazy, that's when I'm like, game on, let's go. It's time to rock. And everybody else thinks I'm like, they're standing on the sidelines going, what the heck is wrong with this guy? That's
Well,
my superpower.
that's a great superpower to have, because
Right.
remaining calm in very high stressful positions and situations is where you really can make sound and clear decisions. So that's a great quality to have, and I'm glad you shared that. Where can the listeners find Robert Cloud if they want to get in touch to talk about mortgages, want to talk about refinancing a property, want to talk about how they can get off of their forbearance as quickly as possible, etc.? Where do they find you?
Okay, so I actually do go to the office every day right now.
Okay.
I'm actually at 2701 East Camelback. It's right where the Lerner and Row building is. Suite 173. I also have a website, pcmloan.com/Robert Cloud. Yeah, the social media stuff, I'm on there, but I'm still working on that. I'm like sort of old school. So um,
Is
I'm not
it
very,
is it
I
easier
have a LinkedIn account, but
is it easier for people to just reach you online, like go to uh, your website?
um,
Probably.
yeah, the website, there we have online apps there. Actually, the nice thing about our company is we have like cool online app that's like Quicken Loans, Rocket Mortgage thing. But in of course you can email me, but
Perfect.
um,
Perfect. Good deal. Well, Robert, it's been a pleasure having you here today, man. I'll look forward to keeping in touch with you, obviously, to see how this whole thing shakes out, see what's going to happen in the lending industry and just what's going on with mortgages, to stay ahead of that all the time.
right, yeah,
For
absolutely.
all you listeners that have stuck with us up to this point, please like, share, subscribe to the Invest This podcast, because, of course, you don't want to miss another episode. And two, share it with all your friends. We want to try to get the word out to everybody about this, about what's going on in the lending environment. And I can't do that if I don't have your support and share this to everybody everywhere that you can. Of course, you can find me all over any social media. Feel free to reach out. Go to investthispodcast.com. Find me there. Always open to answer any questions, concerns, or anything I can answer for you, the listener, because ultimately this is all for you to begin with. So with that being said, Robert, thanks again for being here. We'll talk to you real soon.
Absolutely, man.
All right. See ya.
All right.